Hi, now welcome back to episode 2 on how to trade correlated pairs efficiently, profitably. So this is episode 2. So now we are on what is the correlation coefficient. If you are a mathematician, you understand something called coefficient. Don't worry, but let's just don't think too wide. I'll find a way to explain them with ease. Right? So that is it. So we talked something about the correlated spread in terms of their direction, either they are buying or they are selling up or down, right? That's the direction that we are talking about. Then we talk about the value, right? That is what is called the coefficient. So are they, even though we are talking about positive correlated and a negative correlated, now when you take only positive correlated, there are some two pairs, right, which are more or strongly correlated than others. So for instance, let's say the EU and GU that I'm trading, right? For instance, they are positively correlated, but there could be another pair, another two pairs, right, which is more stronger in their correlation more than the EU and then the GU. So that's what we are talking about. So we have the magnitude. Some are stronger than the others. So it's just a matter of you identifying, looking at the pairs that you want to trade. So we'll get to the charts where you, in fact, on my fx.com, we have the live update, right? As the prices are moving up and down, or the market is open, you get to know them in real time, right? Now, I've intentionally recorded this, or I'm recording this video on weekends where there's no market activity. So everything is what? It's fixed. It's stagnant. So that is it. So with that, you understand, and then we move to the myforex.com. I will even give you a snapshot here, like a glimpse here about the coefficients and all that. So that's what we are going to look at. So now, a correlation coefficient represents how strong or weak a correlation is between two forex pairs. Now, correlation coefficients are expressed in values, right? In values, and can range from -100 to +100, or better still, -1 to 1. I'll explain it now with the decimal representing the coefficient, right? So we look at this value, the -100 to 100. So if your value, the correlation between two pairs is negative, it ranges from any negative value up to 100, it means that they are strongly negatively correlated. It means that they move in different directions, and then the magnitude is very big. So, like we said, we look at what the forex hedging, right? Yeah, hedging strategy, whereby you use one profitable position to set off another a loss or losing position. Do you understand? So if you understand these things, you can trade them in that way, in that sense. So that is it. So when the value is more negative, bigger value, that means they are negatively correlated between the two pairs. So this value, a negative value like -100, is a value between two pairs. That's what we are talking about. Look at this very well. A -100 is a value between two pairs. Then if there's another 100, then this is another value between two pairs. So it's not like from 100 to this. We are talking about the any negative value ranging up to -100. So -70, right? And then -90. So if you are comparing these two values, then -90 is more and strongly negative. So that's what we are talking about. So I think you have gotten the picture. Now let's proceed. Now, anything in the negative range of -1, -100 means that the pairs move nearly identical, but in opposite directions. You understand? Whereas if it is above 100, it means that the pairs move nearly identical in the same direction. You understand? Now, nearly identically is an important distinction to make, because correlation only looks at direction, right? So I said this, Our main focus, you are looking at how the currencies are moving, the direction. In fact, you trade direction. You understand? In this forex venture, we are trading what? Trends. We are trading direction. The market only has three directions. In fact, mainly two positions, two directions, as you say, even though we have the third one. But the third one, they are not tradable. Why would you even trade a ranging market? In fact, a choppy market, because ranging market can be traded. But a choppy market where prices does not actually give you a better view of their direction, right? So if it is trending, buying upward, you follow. Selling downwards, you follow. If it is choppy, why would you bother yourself? So that's why I'm saying that we have three directions, but mainly we have two. So we are looking at what the direction. That is what gives us the edge to trade the market. You wouldn't bother yourself trading choppy market. You understand? So that is it. Now, for example, one pair may move up 100 pips. You understand? 100 pips. Pips means percentages in point or percentage in point, while another moves down 70 pips. So both pairs may have a high inverse correlation, even though the size of the movement is different. You understand? So if any reading is below 70 and above 70, it is considered to have a strong correlation, as the movement of one pair largely reflected in movement of the other. You understand? Don't worry, I'll go and show you the chart, then you understand whatever is going on. So I'm going to read this again. We move to my fx.com. That also makes it quite simpler than even this. So don't worry, just be patient and then listen to what I'm saying. Now, if a reading is below -70 and above 70, positive 70, that's the range that we are talking about. It is considered to have a strong correlation. You understand? So the values that we are going to look at, be checking these values, right? Sometimes it may just be below 70, -70, but it still will give you the edge to actually trade. But we are looking at the 70s, whatever. So that is it. Now, it is considered to be to have a strong correlation, as the movement of one are largely reflected in the movement of the other. Readings anywhere between -70 and 70, -70 and positive 70, on the other hand, means that the pairs are less correlated. With forex correlation coefficients near the zero mark, both pairs are showing little or no detectable relationship between them. So any value outside this or below this range that we have talked about, they are they do not have any special correlation between them. It is random. So why don't you avoid them or only trade one? So you understand? So that is it. A minute. So yes, so that is it. So about the formula, I don't even want that. I don't even want to bother your head with these things. This will actually have to look at some values from your charts, like a random value, right? And then you fix them in. And then for you to determine that you don't need this. We are looking at the direction and whatever. Even the charts, the real-time charts, looking at the pair that you trade is enough. You don't need this. You may get yourself confused. So now let me just have a brief discussion here. We move to the myforex.com. That is much better. Now, forex correlation pairs. Now, the following table shows the correlation between some of the most traded currency pairs across the world. You understand? You always have to look out for most traded pairs. Don't try and do things on your own, because the market, in fact, I always say that you yourself, you are not a market player. You are just a retailer. If you don't know understand who is a forex retailer, you have to watch my beginners lessons. You are not, in fact, I don't even want to say much about it. You are just following some people's footsteps. You are just leading their walking in their footsteps. Whatever they are doing is what you are doing. You can't do anything apart from that. That is why anytime you take your decision and it doesn't go in the direction of what the market plays, you lose. It's not a matter that your trading strategy is wrong, or you don't know how to trade or whatever, or you have this FOMO, or you're not good at anything. No, you have to look at what the market players are doing, and then you do that. So that's what you are going to look at. Now you can compare each currency on the y-axis to those on the x-axis to see how they are correlated to one another. For instance, the correlation between EUR/USD and pounds/USD is 77, which is high, which is quite high. You see, I am also going to prove some. In fact, I've proven again. Now, it's good that I'm even using a site to do my explanation to teach this lesson. If you understand, I told you that I trade EU and pounds. What? I trade EU and GU. This is it. You can see it for yourself. I didn't create this site. This site is fine. It's a broker. In fact, I'm not even working there. I'm not even an affiliate with them. I didn't create this site. So it's good you're seeing things for yourself here. I always live to prove to you. I don't need to brag. Let's continue. So between EUR/USD and pound/USD, see the value is 77. This is a positive value. So a positive value means that positive what value means that they are positive what correlated. You have the chance to trade them if only you monitor this all the time. I've done my back testing and I think that's okay. I don't need to every day go and check the base. I can only look at it from the chart and I'm okay. So EUR/USD and pounds, EUR/USD and pounds/USD is 77, which is positive value. That is it. So you see, so we have what the x-axis, the y-axis that we were talking about, and then the what the x-axis. It's just the vertical line, the horizontal line. So the same pairs listed on the horizontal line are also listed on the what the vertical line. X and Y are the same thing. So you have to compare them. Now you realize that if EUR/USD is here and another EUR/USD is here, there's no value there. In some other charts, instead of putting nothing here, they put 100 there. If it is 100, then that means why you can't compare the thing with itself again. It's the same value. It's like comparing 0 with 0. Comparing 0 to 0 is 0. So that is it. So in other charts or other sites, what did they do? They use 100, and then that is it. So EUR/USD, there's nothing here. Now compare EUR/USD and pounds/USD. See the value here is like the horizontal against what? The vertical. It's 77. So it means that you can actually trade these two pairs. It's a positive sign. Now look at EUR/USD and then Australian dollar against the USD. You see the value also is positive. It's good. 77, 75. It's a positive number. You can actually trade it. Now there's something that you have to take note. Still proving myself. I told you that when the pair is what? XX/USD, right? Those two pairs can be traded. That's why I trade EUR/USD and pounds/USD. You realize EUR/USD, USD is on the right. Pounds/USD is also on the right. Now look at EUR/USD again, and then Australian dollar, and then the USA dollar. You see the same what formula. AUD against sorry, why do I keep saying USD? AUD against USD. You see the same thing. So it means that I myself that I trade what EU and GU, I could also use the same idea and trade AUD, right, without any problem. So in the same way, in fact, when I started trading, I was trading AUD against the USA dollar with the same type of position. And I didn't really have any problem with them. Just that AUD had a lot of news. Their news are too many. And at the time that they have their major news, that time I may not be active or I may be asleep. I may not be around to be monitoring my trades, right? Their news usually come in the night, late in the night, early in the, you see. So because of that, I decided not to trade it. So you see the reason. And then the second thing is, I don't like to trade a lot of pairs. Now you come to a point that you understand that you don't really have to trade a number of pairs. At most, per statistics and the record, if you are trading a particular type of asset, let's say forex, at most, in fact, the professional even advise that you even trade one pair, which I know is going to be very difficult for the amateur or intermediate. They will find it difficult to obey to this idea or accept this idea. They wouldn't. They think trading a lot of pairs makes them more profitable. I'm telling you, that is wrong. Someone who trades one pair has more time to analyze that pair and will not be entering into trade impulsively. Will have to wait for that setup to be a higher to be of higher probability for the enter, and it's a good thing. But I know you wouldn't listen until you test it yourself. So I wouldn't even force anyone. But if you are wise enough, you just have to listen. Find your niche. So that's why I trade. So to avoid trading a lot of pairs, I do only EU, GU, and then sometimes gold. I was even trying to study oil, but I'm still on that. So you understand. So I could also trade someone. So someone who trade EU, right, and another person trading AU, right, may be profitable many a time at the same time because they are positive word correlated. Then you can even take this one too. Someone who trade EU can also equally trade this one. You understand? Pounds to you see. So that is the same. Just look at the chart. Better so you can pause the video, right? And then look at what is happening here. You understand? So that is good. Let's see something here. Now, let's read this one. Now, while the pairs won't always move in exactly the same direction, they do move mostly together. So you see, I told you one thing that in forex, nothing is 100% with assurance. Nothing. If someone says this, a mentor or anybody at all says this, please run away. They just want that fame or just want people on board with them. No, I don't do that. Even though I want us to go together, I want you on my network, my community. I wouldn't lie to you because if I lie to you, with time, the truth will come out, right? I intend building a legacy with honesty. That is it. So there's no need. Of course, you're not sending money. I'm not collecting money from you. So why would I even lie to you? I'm just passionate about what giving what information, teaching. That is it. So now, while the pairs won't always move in exactly the same direction, they do move mostly together. Mostly doesn't mean always, right? Now, in comparison, the pounds USD and euro against the pound, right, have a strong negative correlation. Strong negative correlation. Now, it is negative 90, almost negative 100. So negative correlated. Even though the term or the literal words here says that they are what? Negative. It could be advantageous to you that you can trade the two. So when you're trading the two, you always have to make sure that the positions that you enter on them, the type is different. They are different. Buy on one and then sell on the other. Buy on one and then the sell on the other. So that is it. Meaning they move in opposite direction. Good. That's what they are even saying. They move in opposite directions as much of what? The time. So most of the time. Now, monetary currency correlations is important because even in this small table of currency pairs, there are several strong correlations, right? So the correlations is in terms of magnitude. Some are huge, some are bigger than the other. So you just have to find time and look at that. I can do that for you. I have found my niche with EU and GU, and then AU is there, right? If I like, I'll add the EU and the EG. That is it. But my style, my trading style, which I intend teaching and then doing a video on that, trading strategy doesn't allow me that I should be going on different positions. Meaning buy on one position and then sell on another position. I don't do that. I like the same type of what trade position in my what running trade. That is why that is my style. So you just have to find your niche, right? So thinking that they may have two different positions. For example, however, because the pairs have a higher negative correlation, they are known to move in opposite directions. Therefore, the trader will likely end up winning or losing on both, as they are not fully independent trades. So you understand? I've also what explained myself about why I don't like entering positions in terms of the types. So I don't buy and I don't sell on what? I know it's a normal thing. Even the professionals also do. They buy on one thing and then they sell another. But then when they do that, then the pairs mostly will be what? Negative correlated. Even if they don't know what is negative correlation and positive correlation, it's because they have studied the pair and the pair, that's what the pair does. So they are able to enter on what? Two different positions and then they are okay. Without even understanding what is correlated pairs. But now, my intention is to let you understand whatever you are doing. It is high time you understood whatever you are doing. I hope you get me. So that is it. So I think we are good to go. So the hedging, I don't think I should even worry myself with the hedging. Just let me read something about it. So now the forex correlation hedging strategy. Now, correlation allows traders to hedge positions by taking a second trade. We have already explained this. I'm just going to read. Position by taking a second trade that moves in the opposite direction to the first position. A currency hedge, right, is achieved when gains from one pair are offset by losses from another, or vice versa. This may be useful if a trader doesn't want to exit a position but wants to offset or reduce their loss while the pair pulls back. People do that a lot. So many a time they don't even enter the trades, different positions on them at a go. They enter one. So when they think the loss is too much or is almost getting to the SL, then they'll go to the negative correlated one, right? And then they enter big lots there. Of course, I am not advising, I am teaching you. I am not advising you to do that. But that's what some traders do. So they enter first. If they are losing and they think there's no savior, then they'll go to the negative one, enter big lots just to cover their asses up. So that's what they do. If you're amateur, don't try this. Now, for example, the Euro USD and AU share a strong positive correlation. You understand? You are seeing the picture now. Right? So now they are not even dealing with the EU and GU, but they are dealing with another pair, which is also positive correlated because of their currency matching, the pegging. Share a strong position correlation in the table above us at 75. Right? So let's see the Euro USD and AU USD. Let's see. Euro USD and okay, that is a 75. I told you can trade them, so that's what they are talking about. Right? Yes. Now, buying the USD and selling the USD creates a partial hedge. If it is partial because the correlation is only 75 and correlation doesn't account for magnitude of price movements, only direction, right? In the case of the pound USD and then this, right, the EG, there's a negative correlation. Therefore, buying or selling both creates hedge, right? Buying the pounds USD will make money if the pounds USD goes up, but those gains will be offset, you understand, by the long position on EG falling because of the negative correlation. I think you understand. So I'm just going to, now in fact, you can pause the video here, read again, and understand what we are talking about under, what is it? Under hedging strategy or FX hedging. That is it. I think we are good here. So let's move to myforex.com. I told you this site is very good. I do most of my activities here. Very, very, very good. Now, come back to myfx.com. You can even type into your browser, myfx.com. Then when you come here, if you are not already, you don't have account with myfx.com, you can do that, sign in with your Google, right? As SSO, right? Login, use it, and then You enter. When you enter, you see home, portfolio. We have treated it already. Portfolio and risk management. In fact, generally, sorry. Then we have news, market systems, community reviews, brokers, charts, and then education. Now, look under the sub menu again, come down, and then you see correlation. Under correlation, click that. Now, when you click that, this is the page that you should give you. So that is it. So it should be here. So it's the same chart that we saw in at CMC broker site, right? Forex broker site. Now we are going to have a real-time data, right? Even though the market is closed at the moment, but we have the data here are actually correct data. I think on Friday, last week Friday. So that is it. So let's read something small about correlation. Now, once again, now type in the correlation criteria to find the least and or most correlated forex currencies in real time. So real time means the thing is happening, right? The data is real, it's current, it's timely. Now, correlation ranges from negative 100% to positive 100%. So I think we have looked at this, right? With a negative, any negative number from whatever, from let's say 1, yes, up to negative 100%, we are negative what correlated. Then the positive one up to 100 value is what also a positive one. So that's what we are talking about. So if you want to check this, you just type in the what find the currencies with correlation lower than. So you put in the value, right? We have the 80% or 70%, whatever value you see. So the moment I type, you see what is happening. It's a real-time data. Let me name it 89. Real-time data. Let me say negative, let's say 60. See that one too. So we are real time. So you can do that. But I'm just going to keep it as it is for demonstration purposes. I don't need anything. So we have the chart again. We have the what? The y-axis, and then we have the x-axis. It's the same currencies that are listed in this side of the what? The chart, the x and then the y. You compare them at where they meet, they intersect on the line. So this 100 means what? AU, in fact, AC. I use the initials to make it simple. AC means what? Australian dollar against the Canadian dollar. And then you have the same thing here. I told you in the previous chart that for some sites, they make, instead of leaving the position blank or the text value, in fact, the text area blank, what do? They put 100 there. So 100% is okay. They put 100% there. And then, right, they put 100% instead of nothing. So it's the same thing that is running through here. So AUCAD, then take it. So let's say I'm going to compare USD against pounds USD to see if there's a correlation between the two that I can trade. So first of all, let me look for AU, that's USD on the what? On the y-axis. This what? USD, right? Now, USD, let's map it until I meet pounds USD. You see what I see here? You see here. So that was a real time on Friday. You understand? This changes because it's real time. It's not a fixed value, right? But even though they change, in general, or many a time, or most of the time, they are positively related. So the value could even rise to what, 90, positive 90, and come back to positive 80, or back to even positive 100%. You understand? So that is what it means. They are positively related. So that is what you need. Now let me tell you, and let me show you another thing. What I said, you can be selling USD or pounds USD and be buying USD card. So now let's take USD again, and then map it to what? Pounds, sorry, USD card. See USD card, see where they meet. This is what? Negatively correlated. So it's a good value for me. Now, let me tell you, the fact that it's a negative doesn't mean it's a bad thing. A negative number in mathematics doesn't mean anything bad. It's just a calculation. It's based on how you use it. So now we have your USD matching or mapping up to USD CAD. I see negative 83.5%. So it's a good thing for me if I want to trade USD CAD. So when I'm trading USD CAD and Euro USD in position, in running positions, what I have to do is I should enter different types of positions on them. If I enter the same thing, right, then I may be, if I'm aware of what I'm doing, then I may be doing what? FS hedging. If only I know what I'm doing, FS hedging. And then doing this FS hedging, you have to understand what you're doing in order to come out at what break even or even gain some profits, some minute profit on the trades. If not, you will lose the two. You understand? If you don't know what you are doing and enter the two at the same time, then you will lose the two. So that's what. So you have to understand what you are doing. So you understand. Now you get a picture that whatever we are doing here is not like you don't. You should know your left and right, your left from your right. So that is my aim here. Don't do things like you were a newbie or you are a newbie. Understand what you are doing. You should be able to even explain to people why you do these things. And this reflects in your training strategy and your risk management. You understand? So that is the main idea. So now I think with time, I don't want to let the video be lengthy. My main purpose is to let you know and how to use correlated pairs profitably, efficiently, right? You should have the insight as to how things are done, why things are this, why I trade this, why I don't trade this. So that is the main idea. So I think we'll draw the curtains here. Please show some appreciation by liking, subscribing, and then sharing our video. Join our community platforms, Telegram, IG, Facebook, TikTok, and then the other platforms. Please join us on that place, at that place. And then we'll have some live updates. We teach you things. Yeah, it's not everything that I can be doing video on them, but if there's small information, just anything, I just drop them there in the Telegram page or on the other social media platform. So thank you very much for watching. Please have time, watch this, understand them. If anything, email me, send me a message or anything, then we'll see how we can go around it. Thank you very much for watching. We'll say bye for now. See you in the next episode. The next video. Not actually part one of that, but this is the final video on correlated pairs. So bye for now.